dropped again today. The Dow drops more than 450 points. And S&P 500 posts its worst day since January on worries over the economy. Stocks dropped on Friday as investors worried global economic growth could slow down following the Federal Reserve's cautious outlook from earlier this week and weak overseas data. The Dow Jones Industrial Average closed 459 points lower as bank stocks fell on an inverted yield curve, which some investors see as a signal of a recession coming. Which I already knew the recession was coming because of 45 shitty tariffs and everything. The S&P 500 fell 1.9% and notched its biggest one-day drop since January 3rd. The Nasdaq Composite declined 2.5% as shares of Facebook, Amazon, Netflix, Alphabet, and Apple all closed lower. There's a host of worries out there, and those worries continue to mount, says Peter Cardillo, a chief market economist at Spartan Capital Securities. The fear of a recession is increasing. As a result, we have a market that is rethinking some of the optimism that was priced in. The spread between the 3-month Treasury bill yield and the 10-year note rate turned negative for the first time since 2007, thus inverting the so-called yield curve, according to Refinitiv TradeWeb data. An inverted yield curve happens when short-term rates surpass their longer-term counterparts. This is considered by investors as a trustworthy indicator of a recession coming in the future. Banks shares led the decline. Citigroup fell more than 4%. Goldman Sachs, Morgan Stanley, JP Morgan, Chase, and Bank of America all declined at least 3%. Friday's moves come after the U.S. Central Bank surprised investors by adopting a sharp dovish stance on Wednesday, projecting no further interest rate hikes this year and ending its balance sheet roll-offs, but the reasons behind it caused some concern. The Fed justified its dovishness by cutting its U.S. economic growth outlook for 2019. Maybe one should think about the global economy and not pin everything on the Fed, Jeffrey Gundlach, CEO of Double Line Capital, told CNBC's Scott Wapner. Except the Fed should cooperate in consideration of global conditions too. Friday saw more weak economic data from around the world that added to the concerns. I kind of figured that this was going to happen anyway, and there's a lot more to the story than what I'm reading on my tablet here. But I already knew that the recession's coming because of 45 shitty trade tariffs and trade deals and everything, and that's going to come back to bite the U.S. in the ass. And stuff like that, so I kind of knew this was going to happen. And then it says Boeing dropped 3%. Nasdaq